Okay, dear my students, listen carefully. I told you already some notes I uploaded. It means the photocopy of all are not having the textbook. If you are having the textbook, no problem. If you did not purchase the textbook, old or new, then do one thing. Now before continuing this video, first you pause the video and just download it and keep one hard copy of this with you. Then only you listen my class, because I am explaining the first chapter that is given in the website. Otherwise in the textbook it is there. From the textbook you can refer it what I am telling. Okay, so from the first page I am telling. The first page is telling about the evaluation of accounting. Means how the accounting that is started. Accounting is a science. Okay, how it is started means they are telling about its history. It's a history that is starting from when the human race is started to live. From that time onwards, this subject is there, because when the business man was there, they started a commerce and trade. Okay, from that time onwards, they need to record the different transactions for the future evaluations. Okay, so that from the different periods, different people, they implemented different methods in the accounting, and at present we are using a systematic method. This is implemented by Fra Luca Paciolo. He is a philosopher of Venice. Okay, and he published one book. That book was published on 1494. In that book, he applied a new method. He was telling a new method. That method we are following at present. And his method was, he was using double entry principle. Okay, and in the accounting we are using two terms always. That is, the one is debit, another is credit. Okay, that we are going to use in the coming days also, debit and credit. So this term firstly used by this Fra Luca Paciolo. Okay, you can refer, it is given in the middle of this first page, it is given, and in the first paragraph you can read, it is telling about the history of this one. So I am telling the main person who invented a new technique in the field of recording of transactions. That was Fra Luca Paciolo in the year of 1494. He written one book. In that book he used this debit and credit. Okay, and he only the first person implemented the double entry system. Now we are following double entry system. Double entry system means for one transactions we will record two things for one transactions, that we will study later. Okay, now if I am telling now that you cannot understand, you cannot get this meaning of double entry at present. Anyway, we are following double entry system. Then it is implemented by Fra Luca Paciolo. He is a philosopher of Venice, and he was a mathematician. Okay, then that you read from the first page. Okay, you read the first page, then we can go to the next page. And Fra Luca Paciolo is known as the father of modern accounting. Okay, Fra Luca Paciolo is known as the father of modern accounting. Then we need to go to different terms. Different term means, as a account students, in the coming days we have to use, we will hear different terms. So we have to understand what is the meaning of that each words. Now in page number 2 we can see one heading, basic accounting terms. Okay, in page number 2 we can see basic accounting terms. There are many things are given according to the serial number 1, 2, like that. First one is the business transactions. Then after that next page, what is the event? Second one is the event, and third one is a voucher. Fourth one is a capital. So now I am telling from the page number 4. Okay, page number 4 I am telling, I am going to tell what is the meaning of a capital. You heard about this term many times, capital of Uttar Pradesh, capital of India, like that you heard this term. But in the business, the meaning of capital is different. There the meaning of the capital is the main city of a particular country or a particular state. That is the meaning of capital. But here the meaning of capital is something different. It is not a place. Okay. In the business, the meaning of capital is how much money is contributed by the businessman into the business. That amount is known as capital. How much money is invested by businessman. That person is known as always a proprietor. The person who start the business is known as a proprietor. So a proprietor, for starting a business, how much money or some valuable things he is bringing into the business. Okay, the total of all the valuable things is known as a capital. That may be cash, or that may be some commodities to sell, and this may be some furniture, some vehicle, like that. Whatever things he is bringing to the business, it's a total amount that we can count in way of value. Okay, what is the total value of all these items? I told this may be cash, or this may be some commodities to sell, or some office equipment we can bring, some furniture, chair, table, computer. This everything he is bringing into the business from his personal property. So the total value of all these properties he brought for starting a business, that is known as a capital. And in the business, always we are thinking that business and businessman, they are not the same. We are considering business as a separate person. Businessman is a person, business is another person. Okay, every business is having its name. Any shop is there, we can see one name. That shop and that businessman, according to our accounts subject, they are not the same. They are different. They have a separate legal entity. Okay, businessman and business, they are having separate legal entity. We will not mix the property of the business and the property of the businessman. We will not mix up together. When we are, and for the business, we are keeping a proper records. For proper records of all the asset will be there. Proper records of the transactions will be there. That everything will be there. So this we will not mix up with the personal things of that businessman. Businessman's household expenses. These things we will not show in the business book. That is why I am told business and businessman, they are separate. Okay, they are different. They have a separate legal entity. Okay, so the capital means in the beginning of the business, the meaning of capital is how much value of different assets he invested into business for starting. That is known as the capital. And for a going on business is started and we are continuing the business after 2 years or 4 years. Then after 4 years, whenever we are using this term capital, it means how much money is there that is belongs to the businessman. Okay, in the business, how much money is there that belongs to the businessman, that is known as a capital. Means once we invested some money into the business, suppose at the beginning one man invested 10 lakh rupees, but when we are continuing the business many years, automatically this 10 lakh can increase. That increase means when he is doing the business, profit is coming. Okay, so this profit will be automatically adding to the capital. If the businessman is not taking the profit for the personal use, then this profit will add one by one. Then the capital amount is increasing. So to find out the capital, normally we are using one equation. That equation is assets minus liabilities. Okay, it's a meaning you cannot understand now. That meaning I will tell later. Okay, so I told the meaning of a capital, and already we familiar with this capital. That is a place of a country or a state. But in business, its meaning is different. the amount of money that is invested in the business, that is known as a capital. Okay, then we can go to another term. So from the textbook, this you read from page number 1.4. Okay, then next term under capital, it is given assets. Okay, we can see what is the meaning of assets. Anything which is in the possession or in the property of business enterprise, that is known as a asset. Okay, any properties which is held by the business, okay, that is known as a asset. In the business, whenever we are looking around, you can see many things. Okay, the fan will be there, AC will be there, many furnitures will be there. Okay, table is there. That everything is the property of the business. That the property of the business is known as a asset. The asset includes many things. In that, some commodities is there. That is asset. Commodities means the business is using some goods to sell. That is an asset. How much value of goods is kept in the business, that is an asset. Furniture, it is an asset. Machinery also asset. Land of the business, that is an asset. Building also asset. So asset means the holdings of the business, the properties of the business, the possessions of the business, that is known as a asset. And one of the definition that is given in the for the asset is assets are future economic benefits, the rights of which are owned or controlled by an organization or individual. It means assets are future economic benefits. It means in the future we will get some benefits, then that will be an asset. From a particular item, if we will get some benefit in the future, that will be assets. For example, if one furniture is there, that furniture we can use in the business. Or if you don't want that furniture, we can sell it, then we will get some money. Okay, that is why it is telling that assets are future economic benefits. In the future, we will get some economic benefits. Okay, some benefit we will get in the form of money in the future. That is a asset. And the right of which are owned or contributed by an organization or individual. It means if we have to receive some money from someone, if we have to receive some money from someone, that is also the part of the asset. So this definition is not easy for you. So that definition you can leave. Then one more definition is given, that is Professor Aaron Anthony. Assets are valuable resources owned by a business which are acquired at a measurable money cost. It means asset is always having some value. Okay, asset is having always some value, and this for the business we are telling about what is the asset of a business. So this particular item or that particular commodity or that property, it is owned by a business, and this for getting this one we have to spend some money. Okay, for getting some asset we have to spend some money. For example, for purchasing a furniture we have to spend some money. For getting a one air cooler we need to spend some money. So for getting the asset we have to some money we have to spend. Then that is another definition of asset. So in simple term, the meaning of asset is all the possessions or all the properties which is held by the business, that is known as assets. For example, stock, then furniture, land, building, furniture, vehicle. Okay, these all are the possessions of the business, and all these items we can use in the business. Okay, for the benefit of the business, all these items we can use. So these are known as assets. And in the asset, some other things also there. If we need to receive some money in the future, For example, we sold some commodities to some person. Money is not received. Money we will receive in the coming days. So how much money we have to receive in the coming days, that is also part of the asset. Okay, the money we have to receive in the coming days, that is also part of the asset. Then assets are classified into two. Okay, that is mentioned. Assets are classified into many type of classification is there. In that one classification is assets are non-current asset is there and current asset is there. Non-current asset and current asset. The meaning of non-current asset is if any asset is kept in the business for a long period. If any asset is kept in the business for a long period, that asset is known as a non-current asset. Okay. Then non-current asset is also known as a fixed asset. Means that is kept in the business for a long year, for a long period. Okay, that is known as a fixed asset or a non-current asset. I am telling from page number 1.4. Okay, page number 1.4. Under the asset there are two type of asset is there. One is first one, it is a non-current asset. Then next page it is mentioned current asset. Okay, so did you understand what is a non-current asset? Non-current asset means these are the assets which we kept in the business for a long period. Okay, that asset we do not try to sell it. For example, building, the building of the business, we want to do business in that building, so we will not try to sell that asset. Okay, so that asset is known as a fixed asset or a non-current asset. Now the meaning of current asset is the money which we invested that is for a short period. Okay, this type of asset that is there in the business for a short period only. After 1 year, short period means normally we are telling 1 year. So those assets which will sell or which will convert into cash within 1 year, that is known as a current asset. And then non-current asset, we can tell that the asset which will convert into cash after 1 year, that is known as a non-current asset. So this boundary of current asset and non-current asset is we can tell 1 year. Okay, those assets which we kept in the business more than 1 year, within that period we will not try to sell it or we will not try to convert this asset into cash. Then that asset is known as non-current asset. And current asset means those assets which will convert into cash within 1 year. Those asset is known as a current asset. So for the current asset, some examples I will tell. One is debtors. Debtors. First time I think you are hearing. I will explain that time later. So one is debtors. Then second one is bills receivable. This also will be a new term for you. Bills receivable. Then cash in the business. Okay, it is already the cash in the business also asset. Cash in the business is also asset. So cash is an example of current asset. Then cash deposited in the bank. Okay, this also example of a current asset. Then what are the stock we kept in the business? Stock means that is some goods which is ready for sale. Every business they are dealing some goods, some commodities they are dealing. So the commodities which are ready for sale, that is known as a stock. So stock is a part of current assets. Okay, so I told you many examples for current asset. One is cash, second one is cash at the bank, then third one is debtors, then trade receivable, then stock. Okay, these all are the examples of current assets. These items we will convert into cash within 1 year. Okay, so above the 1 year, after 1 year, if you are converting, those assets will be which asset? That is a non-current asset. Non-current asset is also known as a fixed asset. Okay, so there are two type of assets there. non-current asset and current assets. Then under non-current assets, in page number 1.5 on top it is given fixed assets are further classified into. Okay, fixed asset means a non-current asset. Fixed assets are further classified into tangible assets, intangible assets. Now I am telling the meaning of different terms. This everything is there in the textbook. After the class, you read one more time only these terms. No need of reading the other things which I did not explain. Okay, what are the things I explained? That only you read it after today's class. From the first page, I started from the first page. First page that full you have to read it. There it is mentioned the evaluation of accounting, the history of accounting. It is mentioned there. This that page you read from there. And mainly I told when it is started and who is the who used the term debtor and creditor. Okay, and he started a new method, and this was a revolution in the field of accounting. Okay, he used a double entry system. This much things you can see from the first page. First page full you read. Okay, then rest of the page I told some specific terms that only you study now, that only you understand now. I told after that evaluation of accounting, I came to capital. Okay, in page number 1.4 it is given capital. So read it. Do you remember what is a capital? The money invested by the businessman into to start a business, that is known as a capital. Then I told what is a asset. Asset means all the properties or all the possessions which is held by the business, that is known as assets. Then assets are two types, non-current asset and current asset. Then non-current asset means the asset which kept in the business for more than 1 year. Those asset is known as a non-current asset. Another term of non-current asset is fixed asset. Then what is a current asset? Current asset is the asset which we can convert into cash within 1 year. That is known as a current asset. Then again we are coming to non-current asset. It is given in page number 1.5. Then there it is telling that fixed asset. Fixed asset means the other term of non-current asset. So this is a fixed asset that is classified into two. One is a tangible asset and the second one is a intangible asset. Then we can see what is a tangible asset. Okay, look the textbook. Tangible assets. Tangible assets are those assets which can be seen and touched. Okay, those assets which we can see and touch, that asset is known as a tangible asset. That asset we can see and we can touch it, we can experience that one. It's a presence, we can see, like it's a shape we can understand. Okay, so that type of asset is known as a tangible asset. If you are telling the examples, furniture we can see, we can touch and okay, so that is a then vehicle, air condition, AC, that one, then computer. These things are example of tangible assets. Okay, and in another words, the tangible asset we can tell in another words which have a physical existence. Okay, those assets which has a physically we can see it, physically existence is there. That type of asset is known as a tangible asset. Its opposite is that is a second asset, intangible asset. Now I am telling two type of non-current asset is there. First one is a tangible asset and the second one is a intangible asset. Okay, tangible asset is the asset which we can see and touch. It has a physical existence, that is known as tangible assets. Example, building, furniture, vehicle. These all the things we can see. Cash also. Okay, cash also, it is a tangible asset. Then what is the intangible asset? Some assets are there that we cannot see. Okay, that asset is known as a intangible asset. See the textbook and understand this one. Intangible assets are those assets which do not have a physical existence. Okay, opposite of tangible assets, which cannot seen or felt. Example of such assets are goodwill. Goodwill means the reputation of the business that we cannot see. Okay, that one. Then patents, copyrights, trademarks, computer software. These are the example of intangible assets. So intangible assets help the firm in carrying the profit, but that we cannot see, like a furniture, like a building, we cannot see it. Okay, so those asset is known as intangible asset. Once again, I am telling the example of intangible asset, and it's a meaning, exact meaning we can realize in the future. One is the goodwill, patents, copyrights, then trademarks, computer software. These things we cannot see, that we cannot touch and understand. So this is known as intangible assets. Okay. And when we are continuing, then we can go to the next page, 1.6. There another asset also mentioned, liquid asset, then wasting assets, fictitious assets, that we can leave, that we will see later. Then we can see what is a liability. Okay, so today I am telling the important terms. Firstly, I told capital. Secondly, I told assets. Assets are mainly two types. One is the non-current assets, then current assets. Non-current assets is also known as fixed assets. Fixed asset is divided into two, tangible and intangible. Then we are going to next term, that is liability. What are the terms I am explaining? That only you read it today. Okay, many other things are there that I will tell you later. Okay, then only you have to read that one. Now you concentrate. This is sixth one, that is a liability. Liability means the obligations of the business, or the money payable to outsider. How much money is payable to the outsiders? That is why I told obligations. The obligations of the business, that is known as liabilities. It refers to the amount which the firm owes to outsiders. Owes, liable. Okay, owes or liable to outsiders. That is known as liability. Liabilities are debt. They are amount owed to others. Okay, liability means it is a debt. Debt means we borrowed some money from someone. Okay, we borrowed some money from someone, or we take a loan from the bank. Then after some days we have to return that money. So if a loan is taken, that loan is an example of liability. Money payable. Okay, already we received some services, or we received some money from someone, and we have to retain that money in the future. So money payable, that is known as a liability. Then actually now we studied three terms mainly. One is a capital, second one is a assets, third one is a liability, and all these three this is together having one connection. In the, that is known as accounting equation. Okay, in the accounting equation is actually asset will be equal to capital plus liabilities. And in the capital we studied one formula. The capital, you see the there, in the capital we studied one formula, that was capital will be equal to asset minus liabilities. And in the liabilities we are studying one formula. Liabilities is equal to assets minus capital. And one more formula I am telling, that is a asset. Asset will be capital plus liabilities, that will be assets. Okay, so these are all the three are interconnected. The total of capital and liability, that will be assets. Then to find out the value of capital, from the asset we can reduce liabilities. To find out the value of liabilities, we can reduce capital from assets. Okay, these three are interrelated, and this equation is known as accounting equation. That accounting equation is asset will be equal to capital plus liabilities. Okay, what is the meaning of liabilities? Liabilities means the money payable to someone. Okay, the obligations to someone. Business owes some money to others. That is known as liabilities. The debt of the business. Debt. Okay, DEBT. The spelling, everything is given. That is why I told you keep one copy of this note also. Okay, you can take a photocopy. Otherwise, if a book is there, that is okay. So that is over. Liability is over, and liability also divided into many, that we can see later. Okay. Now after liabilities, the number is 6. We can go to the 7th one. The 7th one, it is given in the next page. Next page, that is a trade receivable. Okay, it is given trade receivable. The trade receivable means this includes two things. Okay, trade receivable includes two things. It is a total of two items. One is bills receivable. Second one is debtors. Both are new terms for you. Okay, bills receivable is a new term. Debtor also new term. Bills receivable we can see later. Okay, bills receivable we can see later. If I am telling now, it is not easy to understand. It will take time because we are studying a new subject. Okay, up to class 10 you did not hear about this subject also. So now only you are starting. So we are beginners. So first of all we have to understand many terms, then only we can come to this subject. Okay, so I am telling trade receivable, this is the total of two items. One is debtors, another one is trade receivable. Trade receivable I will explain later, and I will tell what is the meaning of debtors. The meaning of debtor is if we sold our goods to someone without receiving money. We are selling our goods. The meaning of goods is what is the commodities we are dealing. Okay, for a grocery merchant, for him goods will be the rice, wheat, and all that items will be known as goods. For a furniture businessman, office table, chair, almara, these all are goods for him. So the meaning of goods is the commodities the businessman which the business deals. The commodities which the business deals, that is known as goods. So I am telling the meaning of debtors. Okay, if the businessman sold the goods without getting the money, then to whom that goods is sold, that person is known as debtors. It means from the debtors, business has to receive some money. Okay, business sold goods on credit. That is exact term, credit. Sold goods on credit. It means without getting the money we sold the goods. Then another type of sale is there. We can sell the goods by getting the immediate cash. This is known as cash sales. Cash sale is there. Credit sale is there. Credit sale means we sold goods but the money is not received on the same time. Money we will receive in the future. Okay, the money we will receive in the future when, if a credit sale is there. Cash sale means the same time we received the money. That is known as a cash sales. Credit sales means we sold goods but money is not received. the money we will receive in the coming days. In the future only we will get the money. I was trying to tell the meaning of debtors. Okay. So the meaning of debtor is, if we made credit sales, then to whom that goods is sold, that person is known as a debtors. Okay. We sold goods to Mohan without getting the money. Then Mohan is debtor of that business. Okay. So the meaning of trade receivable is, in that two items are included. One is a bills receivable, second one is a debtors. Debtors means to whom we sold goods on credit without receiving the money. To how many persons we sold the goods? This all the persons are known as debtors. And this debtor is an example of asset. Okay. Debtor is an example of asset. Asset means one of the meaning of asset is money receivable in the future. Money receivable in the future is one part of asset. Debtor is a part of, I told there are two type of assets. What are the assets? Non-current asset and current assets. So this debtor, this is an example of current assets, because if we sold goods to someone, it's a money we will receive within 1 year. That is a normal agreement. Okay. If we are selling goods on credit, then it's a money we have to receive within 1 year. So that is known as a debtor. To whom we sold goods on credit, that person is known as a debtor. Then in the textbook, after the debtor, the meaning of bills receivable is given. That bills receivables meaning I will tell later. Then we can go to next term. Next term is trade payables. Just now we seen trade receivable. Now payable. Trade payable. Trade payable is the total of two items. One is bills, creditors. Debtor is there, creditor is there. Okay. So in the trade payables, this includes two things. One is bills payable, second one is creditors. Bills payable, that I will tell later, like bills receivable. Okay. Bills receivable I will explain in the future only, later only I am explaining. And bills payable also I will tell later. Then I will tell what is the meaning of a creditor. The meaning of creditor is, if we are purchasing, we means our business. Okay. If our business purchased some goods from someone without giving money, then from where we purchased, that person is known as creditors, opposite of debtor. Debtor means we sold goods to someone without receiving money. Money will receive in the future. That is a debtor. Creditor means we purchased. Opposite of sale is a purchase. We purchased goods from someone. Money is not given. Money will pay in the future. Okay. We agreed that when we purchase the goods, we agreed to that person that this money we will give not today, we will give in the future. The payment is postponed. So this type of purchases is known as credit purchases. Cash purchases and credit purchase is there. Cash purchases and credit purchase is there. Cash purchase means we purchased at the same time we gave the cash. That is known as a cash purchases. Credit purchases means we purchased the goods, but the money we will pay when? Not now. We will pay in the future. Payment of money is postponed. That is known as a creditor. So there are two type of purchases and two type of sale is there. Okay. That is sales will be this one, cash sales and credit sales. In the purchase also two type of purchase and purchase is there. That is a cash purchase and credit purchases. At the time of credit sales, debtors are arising. At the time of credit purchases, creditors are arising. Okay, creditors means we purchased something, goods on credit without giving money. We purchased it. That is known as creditors. Creditor is an example of liability. Okay, liability, what I told there, liability is the money payable to someone in the coming days. That is known as liabilities. So creditor is an example of a liability. You got the meaning of creditor and debtor. Both are happening at the time of credit transactions. At the time of credit sales, debtors are coming. At the time of credit purchases, creditors are coming. Creditors means money payable to someone. Debtor means money receivable from someone. I think it is clear now. Okay. And debtor is a part of trade receivables. Creditor is a part of trade payables. Okay. Some more terms are there that we can see next day. So today is the first day. That is why I am not teaching too much. One thing you have to do, first page that completely you read, there the history of accounting is mentioned. Okay, that the first page you read. After that, I started to explain that basic accounting terms, that is from page number 2. I told firstly that business transactions I did not explain, then event that I did not explain, and after that voucher is there, that also I did not explain. So this you leave, that we can see later, and you take capital from page number 1.4. Okay, capital 1.4 it is given. Capital, liabilities, assets, these three are interrelated. One equation is there on the basis of these three items, that is known as accounting equation. Okay, these three items are connected each other, and one equation is there by using these three terms, that is known as accounting equation. Accounting equation will be this one. Asset will be equal to, asset is equal to capital plus liabilities. And another two formula also we can make from this one. The main formula is this one, asset is equal to capital plus liabilities. Then from this main formula we can make it two sub formula also, that is capital will be asset minus liabilities, and liabilities will be asset minus capital. Okay, then I explained after capital, I explained assets. Assets are two type, non-current asset and current assets. Non-current asset is also known as fixed assets. Fixed asset is divided into two, tangible asset and intangible assets. Okay, tangible asset and intangible assets. Then we studied meaning of current asset we studied. Then after that we gone to liability. Then after liability, under liability many things are given, that everything I did not explain. I told only the meaning of liability. Then after that we studied what is the meaning of a trade receivables. In the trade receivable, one thing I did not explain, that is a bills receivable. I explained what is a debtor. Okay, and next time we took a bills payable. In the bills payable, I did not explain bills payable. Sorry, the next one was the trade payables. Next one, after trade receivables, we have seen trade payables. In the trade payables, two items are there. One item I explained, that is a creditor, and the second item is a bills payable. That bills payable I did not explain. Okay, that I postponed to future days. So this much you study, this much you read and understand the meaning. Read the textbook also. Okay, and our next class will be, our classes are fixed on, I think already you got the timetable, that will be every Tuesday it is there, every Thursday also it is there, every Saturday also there. Okay, so Tuesday, Thursday, Saturday. Okay, thank you.